Family is head of research at Fundstrat and chief investment officer of Fundstrat Capital, as well as a CNBC contributor. At the time, I think you were talking about some of the people that work in your shop, too, some of the technical people, and you were of the view that we were at least close to making a bottom. And off camera, we were talking, I said, maybe in terms of timing, it was about a month early, but in terms of how far the markets actually went down, you're not off by that much. I think the S&P was down about 6%. Now, looks like it's going to be, if it opens where it is right now, it'll be in correction territory again, down 10. But you have the same kind of feeling for this week that some of the underpinnings are in for a real bottom, for a tradable bottom or a real bottom?
Yeah, I mean, both. I mean, obviously it doesn't feel this way because over the weekend futures came under pressure, but we know markets are really oversold. We know that investors have had a lot of de-risking. And this week, I think into April 2nd, investors have three things on their minds. One is they just don't know what the tariffs look like. They don't know if it's going to damage the economy. And I think third, many are just a little terrified of the policies of the White House. But post-Wednesday, I think markets are going to have some visibility, and that allows us to take some of the selling pressure off. So, yes, I think it's possible that instead of us breaking down here and seeing markets under further pressure, we're actually got the right pieces for a bottom.
Buy, though, into this without knowing what's on the other side of it? That is the fundamental question that people are sitting around trying to figure out today and tomorrow.
That's right. It's an interminable wait for people because it is still 3 days, and they're fearful that we could have 3 days of down 2%. But I kind of agree with Larry Fink. I think the U.S. is going to come out of this okay. I mean, Brexit's an example. Brexit happened, and the U.K. economy emerged okay. It didn't have a huge recession, and the stock market did okay. So for investors today, over the weekend, we had so many thinking the economy is going to completely fall off the rails after Wednesday.
Well, people are starting to say slowing growth and persistent inflation. So you put those together and you get the stagflation. Yeah, that's death for.
Yeah, I mean, there's a lot of distortions of the economy now, right? Because we know people are buying cars and wine ahead of tariffs, and that's creating inflation.
Hopefully, they're not doing it the same, cars and the wine.
Do you think it's pushing up our growth numbers that we're seeing at this point between retail sales and other places, or is it too small to distort things on that great of a level?
I think it's possible economists are only dialing in the negative consequences so far, but not the positive, because rates are down and gasoline's down, and there could be some pull forward of demand. So we might end up having better growth, so less stag, and maybe the inflation stuff is more distorting, and so it's not as stagflationary.
You've had some of your recent calls that turned out to be prescient, bullish calls had to do with inflation not being as bad as people feared. Is that still what you think? Because some of the numbers have at least given a head fake that maybe it's still around, and you throw in tariffs. We just heard what Goldman Sachs say, a half a point higher on the PCE than they thought previously, and 3.5 on the PCE is not going to allow the Fed to relax.
I mean, yeah, it's interesting because Goldman did raise their inflation forecast, but then they're talking about more rate cuts.
I know, which is because of growth concerns.
Yes, and I think we'll have a glimpse of what Fed Chair Powell's thinking because he's speaking Friday after the jobs report. And I do think that it remains a more dovish Fed than many expect. I mean, I think that's what was revealed after the March FOMC meeting. And not that I'm saying it's going to put a reversal of markets here, but I think investors are a little too scared heading into Wednesday.
Bitcoin's testing recent near-term lows, I guess, again. It's been under 80. It's not quite there yet. It definitely is a risk-off trade, and when the NASDAQ goes down, Bitcoin seems to go down. But it also really likes the idea of more Fed rate cuts or the Fed being more lenient. So if we get that on Friday, is this a decent time to be stacking?
I think so.
You do at 80.
Yeah, I think part of this was Bitcoin seasonally was just not going to be attractive until after March ends, and now we're finally exiting March. And so I think not only is the calendar looking better, but as you're saying, the Fed and central banks are easing, QT's ending. I think that with positive Washington sort of tailwinds means I think Bitcoin can do well to the end of the year.
Right. People love it when I ask you what your year-end target is on Bitcoin.
Yeah, and
makes people very excited.
Yes, and I mean,
crazy high again.
I think it's still 150 or higher as possible. Okay. I know it doesn't feel like it, but once we get through this tariff and that agenda around tariffs, markets can look forward to things that could be positive.
Do you agree with what Larry Fink said just about the idea that the dollar could suffer as a result?
They want it to
Bitcoin, yeah.
Yes, I mean, I'd say that Washington understands that too. That's why stablecoin, really getting the right sort of legislation for stablecoin is important, because in crypto, when it comes to stablecoins, the dollar is way more dominant there than it is in traditional markets. So I think you actually kind of protect the dollar with stablecoin legislation.
Do you have a viewpoint on